Hello, I'm Tim Beggins, president of Elk Trading Company, and this is the top news for natural gas. Number one, LNG Canada Train 2 is coming online. Number two, Golden Pass LNG is slipping into 2026 for coming online with Train 1. Number three, the Saudi Aramco is signing agreements with both Commonwealth and Woodside for LNG during MBS's visit to the United States. And number four, the December start, the weather forecasts are turning colder, but they're in disagreement. Let's turn to the spot December contract here on barchart.com. Currently, right now, the December natural gas futures are trading at 4.51.1, down over 5 cents or a little over 1%. As you can see here, we're still holding above the 13 and 48 exponential moving averages. And that first exponential moving average here comes in at 437.70, and we're holding that as support, even as the RSI is trying to turn down. Let's take a look at the hourly chart. And as you can see here, we're currently holding at first pivot support at 441.60 and trying to make it back to 452.60. That's our daily pivot for today. Our upside is at 467.5 and well above that at 478.5. Right now, the RSI on the hourly chart is turning up. So it looks like we're going to try and close the gap and get at least toward the pivot, maybe even unchanged before the day is over. Let's take a look at the front to back spreads. And here's the DEES26 versus DEES25. And I've only included the 23-day exponential moving average. Why? Because we've got the RSI here possibly turning higher, as you can see here, and that is a function of the weather forecast. If the cold weather forecast can start to unify, and they are in disagreement, then this market will continue to push out to the upside for December expiration, which is next Tuesday. Options go off the board next Monday, and there are a bunch of traders that are looking to cover upside exposure at all different price levels in case this cold does come in for December. And let's look at the LNG. This is the JKM or Japan Korea marker versus the TTF or the European marker. And as you can see, we're currently trading at 64.5 cents. We're right above that 64-cent level here, which means that cargoes from the United States, spot cargoes, may be incentivized now to push from Europe back toward Asia. And why? Let's take a look at the weather. This is next Thursday, and here's Beijing right here. That's the capital city for China, and we've got some very, very cold weather coming through. As you can see, this is the temperature anomaly, and this looks like it's at least 10 degrees below normal for at least a day or two, but there's more weather coming through. And you notice a pattern here? If there's weather in Asia, potentially there's weather either in Europe or the United States. The same thing. Why? Because we've got it warming in the stratosphere over the Arctic, which is pushing colder air down into the southern latitudes, which includes the United States, Europe, and China. Typically, we only get 2 out of 3 at one time. And let's look at the temperature outlook for the United States. And as you can see right now, it's just below normal in the Pacific Northwest and Southern California, and above in the Southeast. So this is what's pushing pressure on the spot market. And here's the United States. Again, this is from WX charts. And this is the high resolution model. And as you can see, we've got to keep a careful eye on this area right here. That's the Permian region. And if we get 24 hours below 32 degrees, we're going to lose production. And production is what this entire market is based on. And let's take a look at that GFS model. This is a completely different model, and here it's showing colder temperatures, but it stays away from the Permian region for at least a few days. And let's look at going forward here. As you can see, it kind of dissipates over time, but this is a cold start to December. Let's see if this holds, whether or not it's the GFS model or the European model. And as you can see, there's another blob here on the GFS model coming out of Canada and heading toward the US Midwest. What else is going on? Well, we've got about 13.3 gigawatts of US nuclear outages at this time as they're in refueling and maintenance season, and they're looking to get those units back online by the first week of December. What else is going on in the long-term picture? We've got drought. We've got drought across the United States, all the way from New England down to the desert Southwest, Texas, and even the Southeast and portions of Indiana and Ohio and Illinois. So we really need the rain, but right now we're not getting too much. And here's the stock screener. This is the oil and gas E&P sector. These are stocks between $2 and $10 billion and have a high short float over 10%. And as you can see here for the 1 week performance, CRK up almost 5%, but BKV, which is a driller out of Fort Worth Barnett Shale, is the winner this week at over 9%. So as you can see right now, with prices moving up for natural gas and crude oil in general, these stocks will appreciate because they've got some rocket fuel with that high short float. And let's recap again. Currently for the December natural gas contract, we're trading at $4.50, down 6.6 cents or 1.45%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.